The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 28th. Terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. And I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Internationally, 727-445-1044. Of course, you can try to reach me by email, steve@tfnn.com. Inside the Tiger's Den, you can always go ahead and instant message me or post your question inside the den. Happy to take a look at anything I can to assist you on this terrific Thursday. Of course, this is the Hotel California, sponsored by Tiger Finance News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow. She's trading up 70 points at 16,015. S&P's up 10 points at 1893. NASDAQ Composite up 40 points, trading at 4507. Russell 2000's up 6 points, trading at 1008. You've got gold flat, trading at 11.15. Silver's off 20 cents, trading at 14 1/4. Light sweet crude up $1.13 right now, trading at 33.43. Leading the charge to the upside, up $41 is Amazon. Out with earnings, I believe, after the bell. So certainly trading to the upside. That's up 7%. Google's up 4%, up $30. MicroStrategy, MSTR, that's up 18%, up $26. Facebook up 15%. That's up $15. Under Armour up 14. Chipotle up 10. Lots of stocks moving to the upside out here. And I see I've got some problems on my, I'm going to have to redo my, just to reload my charts here during the break. But Priceline is down by about $8. Regenerant Pharmaceuticals off 16. That's about 4%. Individual stock-wise out there, Intuitive Surgical's down $16. But let's go ahead and get into it. So what the Sam heck are these markets doing out here? Do you have a clue? I don't know if I've got a clue, but let's go try to figure out what the message of the markets is at 10 past 1 o'clock in the afternoon. So we'll just go ahead and take a look at several different time frame charts, maybe to kind of kick things off and keep things in perspective. Let's do this. Let's go to a weekly chart. It is Thursday. The week's not over. Let's go see what it is that we can find out about the weekly charts. Let's start by taking a look. Let's start by taking a look at the Nasdaq, the NDX 100, and the Nasdaq Composite. So we're going to put those up on our screens here. NASDAQ Composite, here's what you and I know, and let's just try to keep things into a perspective out here. We do know that there was a weekly hammer candle that formed the week of October 2nd. 2015. And that low has been tested, has been rejected with what? Last week, another hammer candle. So we've got, and what these hammer candles help you and I to identify is where the markets are trying to hammer out a bottom. That's how it came up. That's really the reason. That's how they came up with the name, how the Japanese interpretation came up with the name of a hammer candle out there. So there is incredibly strong support at the lows of last week, and we haven't gotten anywhere near that level. So that's on the weekly chart. Now, what does that say? That says more likely than not, the market is trying to what? Hammer out a bottom. Let's go take a look at the NDX 100. If we take a look at it, you know, and that's had conniptions in several directions here as of late, we can see what looks like pretty much the same thing as a NASDAQ Composite. Only you've only got about 108 stocks that are really here in this valuation, but we see same thing with regard to the two hammers out here, October 2nd and last week out here. So the market, with regard to those two areas, trying to hammer out a bottom. Let's go take a look at the wide swath of the market. Let's take a look at the Wilshire 5,000. Of course, there are not 5,000 issues traded with inside the Wilshire 5,000, so it's a little bit of a misnomer. There's really only like 3,700. But still, we've got all the U.S. equities out here, the majority of them that are traded. What did it form last week? It formed a hammer. Now, we're looking at weekly charts out here, right? So you've got a hammer that was formed inside the Wilshire back on October 2nd. What did price do? It moved higher for weeks to come. We see another hammer candle was formed out here in October 2014. What did price do? It continued to move higher. Now, this move thus far for the week, nowhere near as strong as we took a look at on those two other weekly hammers out here. But that doesn't necessarily mean that this is not trying to hammer out a bottom. We take a look at the weekly. We'll take a look at the daily charts as well, but I'm not going to change the time frame here. Well, let's go take a look at, again, this just helps you and I to really keep things into perspective out here, because one of the movies I like to watch every now and then, Draft Day. Have you ever seen the movie Draft Day? If you're into football, it's kind of a fun, cool movie. But there's a line inside there. I'm not going to get this verbatim, but basically, and Kevin Costner is the one that says this line out here, and it is this. His line goes, and this is with regard to him trying to make a deal for a trade out there, and the line is, "We live in a completely different world now than we did just 30 seconds ago." Nothing could be more true than these markets. But when that takes place out here, when we see these intraday and daily gyrations, you've got to take a deep breath, and you have to step back to say, what still is the message of the markets out here? If we look at the message of the markets and looking at the S&P 500, I don't recall, did they form it formed a hammer candle last week as well, still intact out here. We see a number of hammer candles down in this area of lows. You've got the October 2014, you've got the level here in August of 2015. If anything, it's very possible that the bottom that's being hammered out here is similar to that August 24th or August 28th, the week of August 28th, and then things really got rock and rolling on October 2nd. So we know that here's one thing you know. This is nothing more than a game of a battle between the Bulls and the Bears. It's a football game. It's a game of war. And what's really important for us to understand is where are the lines of demarcation? Where are the reinforcements? Where is the front line? And I can promise you that the front line for the Bulls is down at the lows of these hammer candle areas. Now, that front line was pushed back just a tad last week in the S&P 500 to that 1812 level. But we're just using these as guidelines out here. New York Stock Exchange, let's take a look at it. It also has about 3,000 issues. Now, this is a weekly chart for the New York Stock Exchange. Do you notice something on this chart out here? Do you notice that price last week was moving lower with less relative weakness out here on the New York Stock Exchange, formed a hammer? How important is that? I will tell you how important that is. Every major bottom, or at least significant bottom, since 1998 in the New York Stock Exchange has this exact same pattern. That's got to make you say, something to think about. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were taking a look at the weekly charts for the different indices out here just to make sure that we have the proper frame of mind as to what the market is trying to do out here. In fact, we just have a couple days worth of trading, right? So, you know, it means we're going to be able to take a look at weekly charts as well. But let's just switch over right now and take a look at daily charts out here. And then we'll step down and we'll take a look at short-term charts and try to figure out, you know, what the markets are doing. But clearly, the weekly charts are communicating to you and I that the market is trying to hammer out a bottom out here. That does not mean that we can't chop sideways for many weeks to come. Shoot, we know that. We basically chopped sideways for all of 2015 for the most part. Now, if we take a look at the daily chart for the transports out here, in the case of the transports, I know which have been hammered for over a year out here, different kind of hammering. We can see on the daily chart that it formed one of our favorite patterns, right, where price extends itself without the energy. Price relative strength, the divergent pattern. Now, and if you're watching this on TigerTV, you know, it's an automated tool that I've created for my charting platform here. And you can see that back here, somebody might look at this and say, hey, that doesn't mean diddly out here. Because look at, you had price moving lower on January 4th with less relative weakness. It was moving lower on January 5th. It was moving lower on January 6th. And I would say, well, you're correct. But it means all kinds of things out here. You see, when price moves higher or price moves lower, there's only one way. There's only one single way that the market communicates to you and I, and that's through Japanese candlesticks. You see, the bulls and bears, if you don't learn the language of the markets properly, because I watch people misuse this all the time, but the market, if it's like trying to communicate, trying to write a letter, not being able to understand grammar. You see how lousy my grammar is out here when I speak to you in sentences that are, you know, there's probably dangling participles all over the place out here, but I do the best that I can. But here's the deal. The stock market here, when we take a look at daily, weekly, intraday charts out here, it communicates to you. And when these patterns, when we see bullish or bearish signals out here, that's when it has meaning. Without it, it's just nothing more than a weather forecaster poking his head out the door, looking at the super Doppler and saying, hey, there's a chance for storms. Or, you know, it's like going ahead and saying there's a difference between a a tornado warning and a tornado, what is it? They call it a warning and what's the other one that they use out there? It's either warning or tornado watch. I always get confused as to which one, does that mean I'm supposed to go watch for tornadoes out there? Probably not. In any event, here, let's get back to the Dow Jones Transports. This pattern confirmed itself a couple of days ago. It's daily chart, nice little bull sash candle. That is a reversal signal back on January 26th out here. Don't pay attention to the profiles that show up on here. Just pay attention to the mere fact that the transports on the daily time frame are signaling to you and I that it is trying to hammer out a bottom. Let's go take a look at the NDX 100. Now, I haven't looked at this here for the last couple of days, but certainly we saw here in the NDX 100, yesterday was basically a horrible day for the NDX. Apple did not do anything to really you got a 14% plus rating inside this index. But take a look at this. The last high that formed out here, last two highs that formed out here inside the NDX 100, what was it doing? It was making your favorite pattern in mind. Prices moving higher, doing with less relative weakness out here. We saw the first time around, we saw that nice little evening star pattern that had formed. We got that confirmation on November the 5th. Price goes ahead and moves higher again here into December the 2nd, right? What does it do? Nice little dark cloud cover. Take cover, folks, out there is really its message, and follow through on the following week. And obviously that was a good enough warning where price went ahead and moved lower. Now, what do we have here? Price on January 21st was moving lower, doing it with that less relative weakness out here. You have a gap up, and a gap up is a bullish. A lot of times people fear the gap out here. Folks, a gap is nothing more than a wide-ranging bar. It is a level of support. You've got to go ahead and color in that principle. That is a bullish reversal signal out here. Now, prices pulled back, but quite frankly, until the lows of January 20th get taken out, the NDX 100 is giving you and I a reversal message signal. Let's go take a look at what's going on inside the, let's go look at, just out of curiosity, let's go see what's going on inside that Wilshire 5,000 out here. Now here, we have not gotten the, actually we did get the bullish reversal signal. This system is not going to pick it up. This is what you'd call, typically it's a 3-river morning star, but in this case here, it took 4 days to actually go ahead and complete. So you've got a bullish reversal signal inside the Wilshire 5,000. Let's go take a look at the S&P 500 out here. Let's go see what it is doing. You got the hammer candle, right? So we've got these signals that the market is trying to hammer out a bottom. Now, does it have to? No. We just said, to quote Kevin Costner, I forget his character's name, from Draft Day out there. We can easily say 30 seconds from now, we live in a totally different world than we did just 30 seconds ago. And we have to be willing to always change our opinions about what the market is communicating to you and I. But that's easy to do. And it's real easy to do if you go ahead and use stops with every trade. If you go ahead and you wrap your entry, bracket it with both an exit and so you know where you're going to exit at least initially, and where you're going to go ahead and stop out, it makes trading a whole lot easier out there. Okay, so that's what's going on the daily time frames, and that's going to help us a little bit with regard to all of the rolling, all of the rigmarolling that is going on inside of the markets out here. Right now, the Dow is up 15 points. The S&P is up 2. The composite is up 16 points out here. Let's go take a look at now some intraday time frames, and this is where things get maybe a little bit dicey out here. And that diciness is when the market, when the NQ was moving lower yesterday. So after, right, there's a couple things that you and I know. First, let's forget about the NQ. Let's go take a look at this. Yesterday, I shared with you that it was a must. Capital M-U-S-T out here, that it was an absolute must. We identified, we were trying to look for different signals out here, right? And we said, what the short-term signals are saying the market is going to go ahead and push lower before it tries to push higher out there. And we said the real key level is going to be the price point of 1909.50. Now, there's people out there that make all kinds of predictions here and there, but you get to say, that Stevie guy, okay, that perseverance guy out here, he said 1909.50. Folks, the actual high during the Fed release minutes out here came in at 1909.50. This thing only ticks 4 ticks out here, right? So you could say, you had a 25% chance. No, folks, it wasn't a 25% chance. It was like a 100% chance that was a level that would act as resistance. And if broken through, that old resistance would become new support. Now, the problem with that is that even if we see price break above that, if you see it break above it today, that would be a positive and a bullish message. If you see it break above it tomorrow, still positive and bullish, but less, because I'm going to have a new number. That new number is going to take place at the end of trading tomorrow or the open on Sunday evening. Could be the same number. Might be a little bit different out there. But that, again, we're just using some of these cool tools. That number's still in effect today. Now, let's go back and take a look at the 30-minute time frame chart. Every now and then, you got to blow your own horn. That sounded probably pretty weird out there. So we'll just have to consider it. I won't even say that. Let's just say when we come back, let's go try to figure out what the NQ is doing, because this market is going to get no giddy up and go until the NQ decides to take off. Amazon, Facebook, Apple. Steve Rhodes from TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 53. S&P is up 7. Request to cover the statement that I made about the New York Stock Exchange during that first segment. That statement is this. And what I said was that since 1998, every bottom of significance inside the New York Stock Exchange was formed with and this is a weekly chart that we're looking at, with the same pattern that formed out here last week in the New York Stock Exchange. Right now, if you're watching this on TigerTV, you're looking at the bottom that was formed in 1998, October 9th to be specific. When did we get that reversal? Price was moving lower with what? Less relative weakness. When do we get a reversal signal? That next week. Really nice morning star. There's your three-river morning star pattern. That was 1998. Just focus on the bottoms here. This first bottom that started forming with that pattern was back in July 12th, 2002. No bullish reversal signal, was there? But there was right here. October 11th, 2002. What did that do? That hammered out it wasn't a hammer candle. Nonetheless, it was the pattern. You had the bullish reversal signal. You got a double test of that, a double confirmation, the same pattern back in March of 2003 out here. Again, just focus on the bottoms. That's what we're looking at. How about the next time? March of 2000 and, you know it, 2009. Formed the same pattern out here, called the bottom. How about back here in October of 2011? Called the bottom. How about you're kind of getting the picture. So I will never, ever blow smoke up your skirt out there. When I say something, and it's why, I covered it yesterday. If I don't know, I will tell you I don't know. And I'll even tell you I don't know with conviction, or I'm uncertain. But when I do know, when I'm seeing something here, I will absolutely have conviction behind what it is, because I go back and do the research. The same thing that you should always be doing as well out here. So the same pattern on a weekly basis has been calling bottoms inside the New York Stock Exchange since 1998. You might say, hey, there's not a lot of samples out there. There was like 5 or 6. Take the information and throw it out the window. It's not going to bother me. I'm just trying to assist you with what is the market trying to do. Now, let's go assist Robert in Chicago and figure out what's going on with ticker symbol NTRS. Robert, thanks for calling. Thanks for holding. How are you today?
Thanks, Steve. Speaking of hammers, I'm wondering if Northern Trust is hammering out a bottom.
NTRS is the ticker symbol out here. And there's no hammer candle, not just yet. And let me just so if we take a look at this here, we'll look at it on some different time frames, try to figure out what it is doing. Right now, there is a TAS market profile. So I'm trying to, have you been watching this equity for a while, or tell me what you're doing here, your time frames and so forth? Sure.
So what I would do is enter here or around here, or if you have a good entry point, I would do that. And my target would be up towards 70. And
your time, so you're looking at holding this for?
Yeah. So if it takes 6 months, if it takes a year, that would be my time frame.
Okay. So if you've studied the trade, you've decided what you want to do, and you're looking. What I'm going to do is I'm going to tell you, hey, what pattern is out there that would suggest that you could do that? There is one. And that pattern is that if we take a look at NTRS, we're looking at a daily chart, folks, and the most recent high that occurred in this was on November 20th, 2015. And if we just simply start doing our wave count in this equity all the way to the bottom, just a few short days ago, as it was getting down to the price point, this is on the trading day of January 25th, what this did, Robert, was it at least got to a 7th wave session out here. That says the way that you treat these 7th wave sessions is if you're going to go ahead and take the trade on this, you just need to put your stop one tick below that low. It's at 58.74. You'd put your stop at 58.73. Right now, trading at 59.51. If that low if you were going to trade it based upon that pattern, you may not be trading based upon that pattern. That's how I would do it out here. No, I would use my normal position sizing. I would say, hey, I just have to give it a little bit of room so I can go ahead and buy more shares. No, 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 no. In volatile marketplaces, this is the most important piece of information I can pass on to anyone. You need wider stops, not smaller stops out there, because you don't want to be right on the trade. And even this pattern could fail and something else could actually pop up here, but you want to make sure that you give it some room. In this case here, that's the only pattern. I don't see price relative strength. I don't see, even if there was an A to B equals CD to the downside, what we don't have out here, Robert, is any kind of bullish reversal signal. There was no such one, even though it's a green candle, so to speak, on January 26th out here. So I don't, and it's trading. The only other bullish potentiality, if that's even a word out here, is that it's trading right now at the bottom of its TAS market profile, which is 59.52, and you're at 59.48. So you're trading really right on it. You give it just a bit of room out there. That's what's going on the daily chart. Have you looked at a weekly chart on this equity to get a feel for what it's doing or where it's going?
No, if you could do that and even take it out to a monthly, that'd be great.
Well, let's see. Okay, so let's go to the monthly. Let's see if there's anything that sticks out at us. And is there a reason? What's the reasoning behind Northern Trust Corp? What's the?
No. Yeah, so I call you about. I tend to focus on stocks I know: Northern, Whole Foods, Procter, Citi. That's just kind of the way I. There's nothing special about it.
Yeah, no, just really trying to.
Northern is headquarters in Chicago, so I know a lot of people work there, and I follow a lot.
Okay.
And it's just like a BNN. It's like a Bank New York. They do trusts. They run pensions and stuff like that.
Okay, cool. So the monthly chart, and I'm glad that you asked me to go ahead and pull that up. On the monthly chart, what sticks out at me are two swing points. The first one is November of 2008. And the top of that is 57.34, and the volume there was 53 million shares. We have a few trading days left in the month. You're moving down with lighter volume, 36 million shares. The thing that you don't have here is we don't have a test of at least the top of that swing point, a test and a rejection, so to speak. And that price level is 57.34. So, yeah, we've got that seventh wave. You can take a stab at it. If that fails, then you're going to want to wait for a price to get down and test at least the 57.34 level, and you want to see it reject that by getting out of there. If it closes inside that candle session, that says to me that price could easily move to probably about 45.74 before you'd want to go ahead and consider taking another stab at it. And that's by taking a look at the monthly chart out here. The weekly time frame for this equity, I don't like the fact that it broke below this hammer candle on a weekly basis. It's sort of a hammer candle, August 24th. If I look for A to B equals CD patterns, so we're going to look for price projections out here, Robert, this is telling us, let's go see what this has completed on a weekly basis. It's completed the 1-to-1. You're now in the 1-to-1.272 area. You're looking at this to get into that 70-ish area. We'll call it intermediate term time frame. This week's candle could easily be engulfed next week if the markets move higher and this moves higher. And so just depending on your level of trading from conservative to aggressive out here, a conservative trader would wait for some type of bullish reversal signal before they would go ahead and take the trade out here. Otherwise, this has 58.20, 53.33. They're wide open without any kind of reversal signals out here. That's my take.
That's perfect. Thanks very much, Steve.
Okay, you bet. Thanks so much for calling. That was Robert in Chicago. That was taking a look at the daily, the weekly, and the monthly chart for Northern Trust Corporation. But it has made that wonderful seventh wave move to the downside. We've got the Dow up 72, S&P's up 9. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Some big movers out here today. You've got Facebook. Amazon is the one that's leading the charge before they release their numbers. Let's take a look at both of those equities. Let's look at Facebook first. Now, in the case of Facebook, let's switch over here and take a look at the daily time frame chart. Daily time frame chart shows huge gap up. Now, Facebook had a high volume high that had not been tested. Nice little gap up, a little turned out to be, it is a doji style candle, but remember, gaps up are bullish or bearish, depending on which way they're gapping. Gap ups are bullish. Gaps down are bearish out here. And this was a wide-ranging bar, daily chart. You got to fill in the gap. You got to color it in order to really get the message of what that candle signal is out here. Nonetheless, high volume high. That had volume of 63 million shares. Well, guess what? You're trading into that swing point with volume. It's 81 million shares out there. The high has not been tested. As long as price closes inside 107.95, what Facebook is going to do, it's going to go at least test 110.65. Now, is it going to take it out? I don't know. If we take a look, because we'll show you two different charts out here. We can see also, by the way, on a weekly basis, the volume of that week, the week that began November 2nd, 187 million shares. You're already at 199. So volume is not the issue. The issue was, and we'll see if it can go ahead and deal with this pattern, because there's nothing more bullish than a failed bearish pattern. Now, this failed bearish pattern really didn't fail, because when Facebook on a weekly basis was moving up into that week of November 6th out here, it was doing so with what? Less relative weakness, right? We just took a look at the opposite, or less relative strength, actually, was moving up with less energy. Right, just the same patterns that you and I looked at for many of the indices, the weekly patterns inside the NYSE. We don't want to go there. We did get a bearish reversal signal here back in December 11th. The week of, price does what? Price moves down with the market, makes a hammer candle. So now you got a nice hammer candle. If price is able to take out this high, the high from November 6th, guess what you have? An A to B equals CD up, just even a small A to B equals CD to the upside. You say, where is that going to take the price of Facebook? Again, this is a small A to B equals CD to the upside, and this says that Facebook heads to, I would say, 138.53 if we close above that level tomorrow. 128.02 is the 1-to-1 A to B equals CD, but there ain't no way that price is going to stop at the 1-to-1 A to B equals CD. Of course, I have to really come back to it as that level's being approached, but the way it looks to me, you're looking at 128, then 134, 138 and then probably 151.91. So Facebook has nothing but higher to go, but it has to close above, and it needs to really do it tomorrow, because I don't know if you're going to have another volume week like we're having here. But if it can get above that V point, 110.65, then it's on its way certainly to higher price out there. Now, with regard to Amazon, they are coming out with numbers after the bell. Here's what you and I know about Amazon. Number one, let's put this on the daily chart first, because it's that daily chart that shows us the gap. Here is the gap on a daily basis with volume behind it. October 23rd, Amazon does what? Comes back and tests that gap, closes that window, repairs that window, whatever it is you want to take a look at. It comes back to the breakout area, which had 7.8 million shares, and it came back there with light volume. 4 million shares, 7 million shares, 8 million shares out here. Finally, 5 million shares on January 21st. So what this says to us, Amazon ought to have pretty good support around the 569, 547 level out here. It's already tested those lows. Resistance inside Amazon, and this is why this is really a consolidation-oriented pattern, unless Amazon can go ahead and take out its highs of 696.44. If Amazon does not close tomorrow, right, we're going to have numbers released this evening, I believe. As long as Amazon can hold the 569 level, then price can easily trade between 569-ish and the highs of about 696, because we have the gap up down here at the breakout, which has been tested, because we have the gap down, in essence, off of those highs. It's really setting up kind of a nice consolidation pattern. What happens if price closes below the 569 area? We'll just simply call it the low of January 20th. Well, then price is likely going to fall back to other signs of strength inside this equity. And there are many of them along the way, on the way up. There's the sign of strength from January 23rd, around 475. There's a sign of strength out here from around April 23rd, around 391. There's a sign of strength out here around January 29th, around 312 out here. But at this stage, looks to me more likely than not that we're looking at a trading range with inside Amazon somewhere between 569 and the 680, 690 type area. That's what I see at the moment. Let's take a look at, let's take a look at some other things out here. We haven't really gone into the intraday charts, have we? We probably ought to do that. You probably want to get a feel. Is there any message of the markets with regard to what's going on intraday? You know, the message that would be out here probably is on this 120-minute time frame chart. And it's really going to come from the NASDAQ, the NQ. And I'll go ahead and load up on my screen out here for you. What we're taking a look at is we're taking a look at our TAS market profiles. So we've got our boxes, our hidden, which are not hidden when you watch the shows here at TFNN, because we reveal them to you. If we take a look at the current market profiles on the 120-minute time frame, we're going to see a nice wide spread out here. That wide spread going from 41.37 to 42.18. The reality is the NQ has been weak. It's been very weak out here. It has not been able to close above its point of control, the level where buyers and sellers, in essence, are having a party. They're comfortable. The reality is it's sellers that are throwing that party, because every time price gets up to 41.83, kaboing, it gets sold off. If price can get above 41.83, you're looking at 42.18 as the next range out there. If price can close above 42.1875, then the NQ may start busting out. Look, you've got Amazon that could certainly help that. I don't know who else is out with earnings, but, we're full flung into the earnings cycle out here. But that is what the NQ needs to do. So you got 42.19 inside the NQ. You've got 19.0950. You don't even have to question it inside the ES Mini. Those would be two signals that the market, which is trying to hammer out a bottom, is now getting ready to move to higher ground out there. And I'd say that it's really watching those two levels that are going to give you the best signals. We can go look at other patterns and so forth, but that just seems to be the simplest. I know many of you would like to buy the bottom tick out here. I don't know why. I mean, I know you'd like to, but it's such a hard thing to do. It's easier to just simply, see what's going on generally to understand. We've really done that. First, we got to get our grip around what the market's doing, what it's communicating to you and I, and then start stepping from longer term to shorter term and so forth. So we'll just stick with the 120-minute time frames today as being able to give us our best signal. Now, the rest of the markets, such as the Russell, such as the ES Mini, such as the Dow out here, they're all trading above their TAS market profile lows from the 120-minute time frame, but they've actually been camping out below those levels out here. So the body of the candle is truly the essence of price. They're not really saying a whole. They're not really giving us a ton of bullish information out here. So again, 1909.50 would be the numbers that you'd be watching. The question: did I cover the VIX index? And I did not, Tucker, but for you, I will. And I love that name, Tucker. That's another great movie out there, isn't it? I don't know if Tucker was named after the car, right? That was built out there. Couldn't you imagine owning one of those Tucker classics out there? So we're going to go take a look at the VIX index when we get back from this break. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're going to take a look at the VIX index for Tucker as well as you. Now, Tucker was not named after the Tucker, the 1948, I think it was, 48, 49, 47 automobile out there. I don't know how many were produced. I don't think it was a lot, less than 100 or so, but wouldn't it be cool? And I have no idea how much that car is worth. I mean, if there was less than 100, how many can actually be around out there? But in any event, he had asked about the VIX index. If we take a look at the VIX index out here, we're going to see that it's trading at $22.51. If the market's going to really get some legs here to the upside, you're going to see the VIX index close below 2093. That is the line of demarcation out there. So we're not there yet. It's pulled back just slightly here so far today. It's not giving us any message other than that. The line of demarcation, so you've got the number in the NQ to watch. You've got the number inside the ES Mini to watch. Now you've got a number inside of the VIX index to watch as well. That's $20.93 out there. If that continues to act as support, meaning price tests it, moves back above it, then you're going to see the market chop around here. In order for the market to really get legs, it's got to get below that. Now, if the VIX index can close below 2093, then we're looking at a VIX index that'll trade down into the $16 mark out here, or at least that's what it should do. And then, at that stage, that's when we start looking for that next top out here, or at least short-term top, at least tradable top inside of the markets. Not that you can't look for some type of intraday and tradable charts. I'm just trying to give you maybe a little bit more of the big picture out here. So that's what I see going on inside of the VIX index. What else can we cover here in the next 2 minutes that is worth covering? Hey, let's take a look at Under Armour. That's up 21% today. Let's go see what that is doing. They were out with numbers. I think they just simply killed it revenue-wise, and probably, how about that? Son of a gun. Creates an island bottom out here. So if you were wondering what, if you were looking for a bottoming signal in Under Armour, you got it. Big time today. Nice island bottom inside this. Take a look at this. We had a gap down inside Under Armour January 11th. Gap's down with 14 million shares. Today you've traded higher already with about 14 million shares. Leaves a nice gap out there. Today's gap higher. This is as bullish as you can get. See, gaps are your friends. Totally your friends out here, providing us with a world of information. So Under Armour is headed higher. And nothing more bearish than a failed bullish pattern out here. But until you see that happen, and I don't think we're going to see that happen, Under Armour is going to go make a run for its highs. That would be my read on it. Into the 106 area, maybe even higher out there. So it gave you a nice little. So if the markets truly hammer out a bottom, which it looks like they're doing. And you're looking to play some type of momentum move, you probably got it right here inside of Under Armour. If I take a look at that matters, their market profiles, maybe it has a little bit of support or resistance at 85.77. Support would be at the $78 level if it were to pull back into there. But there's no reason that it really needs to do that. Instead, it can just simply be up, 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 and away, and that is on Under Armour. So with about 30 seconds to go, not really much else to cover. Hey, I will tell you that the Euro-Japanese yen, we took a look at that yesterday. That's pointing to the mere fact that this market wants to find some legs as well, continuing to move higher out here as well. So now the bottom came in last week. Now what people ought to be focused on is trying to figure out when does that next bottom occur out here. And I don't know if we're there just yet. We don't have the signals that you and I would like for confirmation. Maybe they'll take place during David White's show. So stay tuned for our friend David White. We got Tom O'Brien from 3 to 5, Andy Heck to take it on home. I'll see you on fabulous and fantastic Friday. Have a great afternoon, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.